We want to welcome you to our session today on year-end security for Microsoft Dynamics NAV. Joining us today is Liz Pateo from Fastpath. And before I pass it over to Liz, I would like to remind you that this session is being recorded and we will be posting it on our on-demand library later this week for you to review and share. And if you have any questions, please feel free to type them into the questions box. We will get them answered at the end of the presentation. And now I will pass it on to Liz to kick off our presentation.
Great. Thank you, Angie. Thank you so much, and appreciate you having me here as a presenter today. So first of all, I am going to say the slides are a little laggy. GoToWebinar is still having some issues, so they may not line up 100%. Try my best. But basically, today we're going to talk about year-end security considerations, and very briefly, I wanted to tell you a little bit about Fastpath. We have been in the security audit and compliance software business for almost 15 years now. We have CPAs and certified internal auditors on staff that help us develop our tools, make sure we're following the latest accounting standards. Over 1,000 customers across 30 plus countries, I should say, and we work across platforms, which basically means that we can go ahead and look at security, not only Dynamics NAV environment, but potentially other environments that you're connected to. The next slide just shows some of our clients, really to illustrate that we don't have any particular client type or client profile that we work best with. We also work with a number of auditors, the Big Four, the Mid-Six, lots of other regional audit partners, and we look to them to help us drive some of the development of our tools based on what they're looking for when they are out on site doing their audits. And so in that respect, we do offer a number of security and compliance products. I'm briefly going to mention them. This webinar is not about Fastpath products. It's really about what you should be doing to prepare for year end in your audits. But I do like to mention that we do have an access review and segregation of duties analysis module that basically takes a look at the security that you've granted to your Dynamics NAV system and tells you based on that security where you have some potential risk. We have our audit trail tool, which is our data change tracking tool, basically helps you see any changes. It's very comparable to the changelog, but we kind of give some additional functionality that changelog can't give, such as tracking changes that happen outside of the Dynamics NAV application. And then finally, Identity Manager is our workflow-based provisioning tool that allows you to go ahead and provision Dynamics Dynamics NAV users using a workflow to send those out for approval. So today what we're going to talk about, and the reason why we're talking about year-end security considerations for Dynamics NAV is that auditors want to know that administrators understand and have control of their system. Okay, so the areas that we're going to focus on in the demo or in the presentation today are end-of-year journal entries, segregation of duties, user security, users, orphaned users, using customizations in place of security measures, and the processes that you have in your organization. And we're going to focus on all of this in terms of a risk-based approach. So we're going to talk about this in terms of looking at what your organization's risk profile is, how to determine what your riskiest areas are, and really concentrate on those areas instead of spending too much time in other areas where your company's exposure might not be that great. So when we talk about end-of-year journal entries, this is a key concern for auditors. And the reason why this is a key concern is because a lot of times at the end of the year, you're doing a lot of true-ups, you're doing a lot of reconciliations, you're doing a lot of accruals for the next year, things like that. And it's the perfect place to kind of hide financial transactions or bury transactions. And so auditors spend a lot of time looking at your journal entries. So one of the things that you might want to put in place is an audit trail on the journal entries in Dynamics NAV, because the things that the auditors are going to be looking for are what periods are these entries being posted to. Are you doing a lot of posting to prior periods? Are you posting things to future periods to potentially mitigate any of your, maybe you went over budget in certain areas this year, or you're trying to reduce revenue this year for tax purposes, and so you might be pushing revenue into the next year, things like that. So they're going to be looking at the period that these journal entries are being posted in. They're going to be looking at the date that these entries were modified. Are you going through and making lots of modifications to these entries? Who modified these entries? Do those people have the proper permissions in Dynamics NAV? Should they be modifying journal entries? Who created the entries and who approved them? Or posted them, or things like that. So those are the key areas that they're going to be looking for. So we recommend using changelog or maybe a third-party audit product to monitor journal entries and see if you can capture some of this data, and then review the captures to make sure that these things are being done appropriately. Because any auditor that's going to come in is going to start testing journal entries. They're going to start looking for things like, are there postings that are happening, late at night or in an off hour when people aren't typically working? Are there lots of things happening in these gigantic batches all at once, and why? What are they? What is the support for these documents? Why are they being made? Why are things being posted to past or future periods? What's the support for all of that? So you want to make sure that you have that documentation available for the auditors, because they are certainly going to be spending time on that. For segregation of, there's 4 main areas that we want to talk about. The reason why we look for segregation of duties is because excessive user access creates risks of errors, fraud, and misstatements. Okay, so having users that have too much access in your system has the potential to create fraud, to errors. Somebody has access to a piece of the system that they're not familiar with. It doesn't fall into their normal line of daily or weekly or monthly transactions. So they may click on something that they shouldn't have, or they may do something that they shouldn't have in error. It doesn't always have to do with fraud. It could certainly be that they are just not accustomed to doing a certain process and they have too much access in the system. We've seen it time and time again in some of our clients where users have accidentally, kicked off a process or posted or deleted something that they shouldn't have because they weren't sure, and they didn't realize that they had the access to do that. Okay, but not only that, if you're not properly segregating duties, you do run the risk of fraud. We were actually talking about an incredible movie on Netflix called All the Queen's Horses. And it's about a woman who is the comptroller of a very small town in Illinois. And she managed to embezzle over $50 million from that town over the course of 20 years. She was finally caught. It took 20 years and it was actually $50.3 million at the end of the day, the total that she was able to embezzle, simply because she really had just access to the entire system. And, there wasn't anyone really kind of checking over her work. So you really want to keep an eye on, who has access to specific areas, especially your high risk areas. How do you determine what your high risk areas are? Well, that comes from a couple of things: your exposure, the materiality of things. So for the examples I always use is talk about a company like Indeed.com. Okay, they are in the business of working with job seekers and job posters. And so they don't have physical inventory. It's not like they have a warehouse in the back of their building where they have bins and shelves of jobs sitting there. Okay, so a lot of their risk comes from revenue recognition, cash receipts, things like that, maybe misstatement of receivables, etc. But then if you highlight that with somebody like a Heineken, where their business is actually manufacturing and distributing beer, their materiality and their risk profile is much different, right? Because they have issues with product spoilage, product storage, product theft, product loss. So their risk profile is going to be completely different than Indeed.com's, and they might have a separate set of conflicts that they're really interested in, or different criteria for segregation of duties than Indeed does. So you really have to understand your company's profile and look at where the risks are, the materiality is, and really kind of focus on those areas. You build a rule set of potential conflicts, and one of the things that we like to point organizations to thinking about potential conflicts is the ISACA, ISACA, the ISACA guidelines for segregation of duties best practices. And I will actually make available a PDF of that document, and I will have Angie disseminate it with the webinar. Maybe she can even attach it. And basically, they look at all of the most common areas where you can have segregation of duties, potential risks in an organization, and you can use that to help develop a rule set, okay? And then the next thing you would do is identify those conflicts. So if we talk about a potential conflict being something like, if a user can create a vendor and then they can also pay that vendor, technically that's a conflict. Okay, so we want to identify the different users that have that combination of access. So if we identify the users, we can now determine, should these users have this access or should they not? And in some instances, the users absolutely should. We run a really small department. We can't have one person creating vendors and one person paying those vendors because nothing would get done. And we just don't run that way. We need one person doing both of these tasks at the same time. And that's okay, because auditors are not looking for a zero conflict environment. Okay, so that's something that you always want to remember. When your auditors are coming in-house, they are not necessarily looking for the fact that you don't have any conflicts at all. They understand that that is not realistic, especially for smaller organizations. But what they want to know is that you've now identified these potential conflicts and that you have a mitigation or a control for these conflicts, and that you've documented these mitigations and these controls. So if we go back to the example of the user having access to create a vendor and then pay the vendor, a control would be that you're using changelog or some other audit trail product to monitor the vendor changes and creations, to make sure that vendors are being set up appropriately, that they're being given, appropriate parameters, things not being changed inappropriately right before a check run, so that the remit to name doesn't change suddenly, things like that. So that's a potential control or mitigation for that conflict. You might have a different mitigation or control. You might have a manager that has to manually sign all checks after they're printed and then match that up with the actual invoice to be sure that the check matches the invoice name, that the amounts match, that everything looks good. So that could be your control. It doesn't matter what your control is. What matters is that you identify it and that you document it, because when the auditors come in, they're going to then say, okay, test these controls, make sure they're in place, make sure that they're being used appropriately, etc. Okay, so that is really what you want to concentrate on for segregation of duties. So basically, when we talk about segregation of duties, the three key questions that any auditor is going to ask, and that you should be asking internally, are: what are your rules? Where are your risks? And what are you doing about it? And that last question is the most important one. What are you doing about the risks that you have, okay? And the material risks. If something is a risk according to, the ISACA best practices, for example, if you have a user that can mark inventory as damaged, but also receive inventory into the warehouse. So maybe they want to mark something as damaged so that they can purchase it as an employee at a much deep discount later. If you're only receiving a tiny bit of inventory and the materiality of that is really pennies when you look at your income statement, that might not be as big of a risk. You still might want to know about that and you might want to follow it, but it's not something that you have to lend a ton of time. Whereas, if you have a ton of cash coming in the door and you need to make sure that that cash is being received and posted to the customer accounts appropriately, you want to spend more time looking at those processes, etc. Okay, so that's really when it comes to segregation of duties, knowing what your rules are, where are your risks, and what you're doing about it. Now, the one thing to know that this is very hard and time-consuming to get right using native NAV tools. You might want to consider a third-party option. There are some tools out there. Fastpath makes a tool. Our segregation of duties analysis tool will give you that information. So just a couple things to consider. And basically, the next thing that we are then going to talk about is how are these users getting this access to do these transactions in the system? So the next area that auditors focus on is user security. Who can do what? This is a very common audit area. They want to know who your Dynamics NAV users are and what they can do with that security. Dynamics NAV does offer some security reports, but the auditors want to you as an organization understand how security is reviewed regularly, right? So they want to make sure that exactly what the security contexts mean, what the roles and responsibilities that you're granting to users are, the permissions, etc., that you have that understanding. Okay, and then we can talk about power users, administrative users, whatever name you want to give them. These are the people that basically have the keys to the Dynamics NAV, the Dynamics NAV world, okay? So you want to minimize power users because it grants excessive permissions. You don't want users to have access to pretty much the entire system, especially if they don't need that. If you have, Gracie in accounts payable processing vendor transactions, she shouldn't have access to the general ledger and be able to post entries or to the customer transactions and being able to modify customers and things like that, right? So you want to really delineate security appropriately and not get stuck using a generic power user or, some role that gives overarching security to the whole system. And you want to manage access to the system as well. You want to check your password policies. Are you making sure that passwords are being changed regularly? And don't use administrator access. I apologize for the typo here, but don't use administrative access for service accounts. Try to have named service accounts if you can. If you're using a generic administrator account for all of your service accounts and something happens and that account is compromised and you need to go in and potentially change passwords for that administrator account, you don't know how many services are running in the background that could potentially break. So you want to be very careful with that. And so auditors really tend to look at an excessive number of power users as a sign of poorly designed security, okay? So you really want to pay attention to who has that type of access. The next thing that auditors tend to look at are orphaned users. NAV users who should no longer have access, whether they've been terminated, whether they've had a job change. So maybe they're still a part of the organization, but they're in a role within your organization that no longer requires Dynamics NAV access. Okay, maybe they're on leave. So they're still, again, a member of the organization, but they're not here right now. They might be on FMLA, maternity, paternity, whatever have you, okay? So you really should be looking at those accounts, and if they no longer should have NAV access at all, you should be removing those accounts. Or if they maybe are on leave and could potentially come back to the same role, finding a way of inactivating those accounts for the period that they are no longer or that they are not using Dynamics NAV. Okay, so you really want to keep an eye on those orphaned users. You should have some sort of a notification process, maybe some sort of communication between HR and the NAV administrators to say, you know, these users are no longer with the organization, these users are on leave, please rescind their access or restrict their access for this period of time. So you certainly want to go ahead and have that process put into place, and then also do regular periodic reviews, because even with that notification process, things can get missed. Okay, you know, an email comes from HR saying, you know, Joseph was terminated, no longer with the organization, please remove his NAV access, and it comes to you in the middle of some big project you're working on. And so you say to yourself, okay, I'm going to get to that a little bit later. I can't drop everything that I'm doing. I need to get this done immediately. And then what happens? That email gets buried amongst the 300 other emails that come to you that day. So you forget to get to it, and you know, maybe a day, 2 days, 3 days goes by, and then it's completely forgotten. So if you're reviewing your access monthly, or even quarterly, depending on how big of an organization you have. Sometimes you don't need to do it monthly. Sometimes quarterly is enough. It really just depends on what's best for your organization. You can then find those users. Okay, and one thing to really understand is that orphan users often function as a tripwire for auditors. If they start to see orphaned users, they then start to think that you might not have a good handle on your security. Okay, so then the next area that auditors tend to look at is customizations in your software. Okay, so a lot of times what we've seen is that instead of properly securing a module, or an area of the system, or creating, you know, proper roles and permission sets and things like that, companies will sometimes put customizations in place. Maybe modifying a, maybe modifying a window in Dynamics NAV so that even though you have access to it, you can't perform a specific function, or putting something else in place, you know, some sort of scripting that's running in the background or anything like that. Auditors would rather not see that. They would rather see that the restriction is being done from a security standpoint using roles and permissions rather than customizations. Now, in some instances, you really can't avoid it, and that's okay. We're not saying that you can't do this at all. We're just saying that it is much preferred to use security rather than customizations, because at the end of the day, if you have a lot of customizations in place, the auditors are going to spend time examining these customizations. Who created them? Were there tickets associated with them? Were they properly developed, tested, rolled out from, you know, a dev standpoint to a UAT standpoint to a production standpoint, etc. And if they start to see too many customizations in place regarding securing the system, then it kind of tips them off that maybe security isn't under control. Okay, so just a couple of things to think of. We're not saying that all customizations are bad, absolutely not. But if you can get around specific customizations with proper security, that is the best way to go. It's actually a lot cheaper too, because anytime that you have customizations in place, those are considerations when it comes time to upgrading your Dynamics NAV environment. You know, you have to take them into consideration when you might be rolling out another product that works with Dynamics NAV, a third-party product, and can those customizations work correctly with those third-party products, etc. So not just from an audit perspective, but there's a lot that comes into play anytime you put any kind of customizations in your system. But when we talk about security, this is an area where the auditors do really monitor. They want to make sure that the security is proper and you have a good handle on it. Okay. And so then the next thing that we want to talk about is processes. So, excuse me, with processes, auditors want to know that companies understand what their processes are and how they work, and they prefer documentation. So if you haven't ever taken the opportunity to build a business process map, it is a little bit of a tedious undertaking. It can be a little bit cumbersome. However, it is such a useful exercise for an organization to be able to go ahead and really, map out what processes are around specific transactions, around specific scenarios, because in this way, when you are mapping out your security, you can map it directly to these processes. You can then also make it easier for transitioning new employees into specific roles because you have process maps and you understand what those employees should be responsible for. So that certainly comes into play. And when we say documentation is preferred, there's many ways to do business process documentation. I mean, it could just be a handbook. You could use what we commonly refer to as the swim lanes, which basically, kind of takes you through what each responsibility is and then what those, tasks should be that are assigned to those responsibilities. You can use in Visio, things like that. There's lots of tools out there to help you with that documentation. It is a really good idea if you haven't ever undertaken that to go ahead and undertake that process and then update it every once in a while. I don't say that you have to update it, quarterly, but certainly potentially annually, or maybe every 2 years or something like that. And more often if you have significant business changes. So if you have brought on a new business line in your organization or something else has changed significantly in the way that you do your business, you certainly want to go ahead and update those processes to reflect that. Okay. And so we always talk about risk-based approach, right? And we always really, really, really preach this. You want to identify the high areas of high risk for your organization. So I talked a little bit about, different companies have different risks when we talked about Indeed versus Heineken. So once you identify those areas of high risk for your organization, focus on those key areas: vendors, configuration, cash receipts, customer creation, purchasing, requisitioning, who can create purchase orders, who can approve purchase orders, who can receive purchase orders, etc. And then even then, once you've gotten your key areas, you don't need to, let's say you wanted to use changelog to monitor, or an audit trail tool to monitor some of these key areas. You then want to focus on key fields. If you look at a vendor, there's probably a ton of fields on that vendor record. Not all of them are risk, not all of them contain areas of risk. Okay, so if we talk about vendors and we want to talk about, okay, if somebody makes a change to a vendor incorrectly, what are the key areas that they could be changing that could really cause us problems in the organization? Well, payment terms. Maybe you're going to offer a vendor more favorable payment terms. Maybe company policy for cash flow forecasting is to pay all vendors in 30 days. And maybe a vendor says to you, well, if you give me my money sooner, let's say you can have it to me in 7 days, I'll drop a box of product on your doorstep. Okay. So you might want to, look at payment terms. Remit to names and addresses. Where are these checks going if we're paying them that way? Who are they being addressed to? You want to look at bank accounts if you're paying via ACH. So what bank account is this information being deposited into? 1099 information, because we all know at the end of the year trying to do your 1099s and reconcile them can be a very tedious task. But if you're keeping an eye on that throughout the year, it makes it much easier. Okay, and so we can do that. We can pick out those key fields for each one of those key areas, and it really reduces the amount of data that we have to look at. Okay, and then anything that you have as a mitigating control, okay, whether it be change log reports, whether it be batch approvals, whether it be manual signatures on checks, anything like that, you need evidence that those controls are in place and those reviews are being performed. That's really what an auditor is looking for. They're looking for evidence that these things are being done. So if you're using changelog, make sure that there's a sign-off process for those reports, that they are being reviewed in a timely fashion. If you have some other reconciliation process, make sure that there's signatures stored somewhere, whether you use a document attachment system within Dynamics NAV to store the documents with their appropriate records, whether you're using some other filing method, just make sure that it's up to date and it's accurate. Okay, and then one of the things to remember, I mean, it's already December 6th. Even if it was November 6th, it's probably too late to fix significant issues for this year. But what you want to do is you want to show progress. You want to show that you have an understanding of these areas that you need to look at and that you're making these improvements for next year, that you're putting processes into place, that you're putting reviews into place, that you're putting controls into place, because that will at least give the auditors some comfort that you haven't just let all of these items sit and not given them any attention at all. So you definitely want to go ahead and show process. Okay, so now we have some helpful resources for you in terms of being able to look for some information as far as where you can get some information on NAV security, potentially selecting audit trail software for Dynamics NAV if you can't adequately segregate duties. And one of the things that you want to look at is tracking changes to the system. So there's a blog out there called Achieving a Proper Security Environment with Dynamics NAV. We also have an ebook that's called How to Select Audit Trail Software for Dynamics NAV. Those can be found at the link on the bottom of this slide. I'm also going to provide you with the Segregation of Duties remediation best practices. It is a PDF document that I have, and I will make that available to Angie, and she can certainly share that with all of the attendees. That is publicly available on the web. Anybody can download it, but to save you the steps of having to Google and download it, I will send it on. So with that, I'm going to see if there's any questions.
Yes, we do have one. And the question is asked, we are a small and only have a few people on our accounting team. How do we do proper segregation of duties with a small team?
That's a great question. And so the best answer for that is you probably can't, right? If you are a small team, it's probably suffice to say that you can't adequately have one person that only has a specific set of responsibilities and then another person that has a different set of responsibilities, and they don't always, overlap or conflict, especially because a lot of times those small teams are cross-trained in case somebody is out on leave or they're sick or there's vacation. Work has to get done. And we at Fastpath always talk about balancing productivity with preventive measures. And so you can't be so preventive in your, in your risk measures that you're no longer productive. That doesn't make anybody happy. So we always suggest that you may not adequately be able to do segregation of duties with such a small team. So you want to put controls in place that will help you identify that where those overlapping duties come into play, that those transactions are being done appropriately, posted appropriately, that master records are being created appropriately, whether it be vendors or customers, opening and closing fiscal periods, creating GL account numbers. So changelog or an audit trail software in that instance is a great control aid. Okay, it's not the only one, but it is a very good one. Now, with that being said, one of the things that you have to be cautious of is not allowing the people that you are monitoring with the changelog also be the ones to review and sign off on those changelogs, right? Because then you lose all independence. So somewhere in that organization, that there has to be somebody that does not have access to the system to make pertinent changes, et cetera, that can be assigned to review those audit trail logs or change logs, what have you, to make sure that transactions are being done appropriately.
Okay, great. Thank you. And we do have another question. What are some things to look for when reviewing audit trail reports that might make it easier to identify improper changes?
So that's a great question, because a lot of times when we get asked about audit trail, people say, I just want to audit everything. I don't know how to really, just kind of pick and choose what I should audit. I'm going to audit everything. And then what ends up happening is they get inundated with data. And we all know that if you're looking at a report that has 10,000 rows of data changes on it, it's not going to be reviewed as closely as a report that only has 300 or 400 rows of data, right? So the first thing that you want to do is, if we go back to where I spoke about looking at those key fields within the key areas, certainly make sure that your audits are restricted to those areas. That's number one. Okay, that's your best bet. But number two, then start looking for anomalies. Start looking at the dates and times that changes are being made. Are they being made outside of office hours? That's a big indicator that something might be wrong. One or two changes made outside of office hours because it's month end and everybody's working late is one thing. A pattern of changes outside of office hours is quite often a very different thing. Okay, something that needs to be paid attention to. If you start to see some changes happening over and over and over, such as a change being made to vendors right before a check run and then right after a check run, what's changing on those vendor cards? Why are we updating vendors right before we're running checks? Is there something going on there? So things like that, just anomalies. Do we see a lot of postings by, a system administrator account or an anonymous administrative account rather than a user? So for example, one of the things that auditors do not like at all is journal entries or, any kind of transactions, payables transactions, customer transactions, et cetera, being posted by an administrator. Especially, if there's any kind of an anonymous administrator account where it doesn't actually have a username attached to it. Individual users should be posting those transactions. So that's another thing to look out for, because that's what the auditors definitely focus on that. Journal entries, lots of entries for very, very small amounts that don't look normal. They kind of look out of the ordinary. Are we trying to bury transactions, by breaking them down into other places, things like that. So those are some of the things that you want to look out for. Any other questions?
Nope. That is all that we have for today. Please feel free to contact us or the team at Fastpath with any additional questions that you may have. All right.
Great. Well, thank you, Angie and Innovia, again for the opportunity to present. We really appreciate it. And I hope everybody has a great day and a great holiday season.
All right, thank you, Liz, for presenting today. And to everyone on today's call or watching on demand, thank you for joining us. We do have a few more webinars coming soon. On December 13th, we have Richard Pedigo from Calumo. He will be presenting on making budgeting and business intelligence easy. And then we have Scott Borsodi wrapping up our final webinars for the year. He will be presenting on improving your bottom line on December 18th. And on December 20th, he will be presenting on managing recalls. So if you're interested in any of those webinars, please don't hesitate to register for them. Thank you again for joining us. We look forward to seeing you again soon on another Innovia webinar. Have a great day.